Hello, I'm Peter Towers for ESS BIZTOOLS. Welcome to Accountant's Minute. You know, once upon a time, financial planning was an accountant's domain. Yes, prior to 1983, superannuation was basically organised by employers for their management team and some of their key employees, and the business advice on everything to do with superannuation and indeed general investments at that stage was in the main given by accountants. There were a few freelance advisory organisations, but they were very small and unorganised. However, in 1983 the federal government introduced superannuation on a much broader plane than what we'd ever seen in Australia before. The original contribution was 3% of salaries, and that has progressively increased over the years to today's figure of 9.5% of salaries, and it is the long-term intention of the government to take that figure through to 12%. This change in 1983 heralded the commencement of independent financial advisory businesses. Organisations like Paul Terry's Monitor Money and a number of others launched in Australia. I was a partner in an accounting firm in those days, and I can remember having many debates within our partnership as to whether we should have linked up with an organisation like Monitor Money or continued to give our own advice to our clients. I, together with a couple of my partners, thought that we were best staying independent, that our clients would show loyalty when it came to the financial planning side of things. Well, unfortunately, history shows that many businesses decided to seek different advice on financial planning. They literally took someone else's advice other than accountants. In 2016, this industry has now grown in Australia to be worth $2.2 trillion, making Australia the fourth largest repository of retirement funds in the world. 2.2 trillion. And how much of the advisory income does your firm receive from financial planning? According to benchmarking.com, the average accountancy business in Australia in 2016 generated 6.2% to 7.3% of their fees from financial planning advice. That's the equivalent of $134,000 through to about $208,000. Nowhere near the bonanza that many accountants assumed would come their way from what in 1983 was perceived as a new income stream. Now, why am I sharing all of this with you today? Well, I believe in 2017 we have a similar situation emerging. For many years, small medium enterprises have petitioned the federal government of the day to make it easier for smaller businesses to be able to go to the market and make an offer to the general market community: would you like to invest in our companies? SMEs were getting sick and tired of having to mortgage their houses on second and third mortgage bases, borrow money off their mother-in-law and grandparents so that they could start a business. In some respects, nothing much has changed, has it? In the early 90s, the federal government of the day introduced Section 708 to the Corporations Act, which there's been a couple of amendments to since, but that section allows a company to be able to raise up to $2 million from a maximum of 20 investors every 12 months. Small medium enterprises tried this legislation, and some were quite successful with it, but many others complained to the government that there was not enough flexibility, that they required the opportunity to be able to raise sums of money from a larger number than 20 new investors. In December 2015, the federal government announced that they had been listening to small medium enterprises and that they were going to introduce legislation for two new types of companies: early stage innovation company and crowdsource funding companies. The early stage innovation company legislation was duly introduced, passed ultimately, and has been available since July 2016 for companies to use. The crowdsource funding legislation was finally passed about 6 weeks ago, and it commences operations on the 29th of September 2017. The early stage innovation company legislation was designed primarily for young companies under 3 years of age in the main, who have been involved in the development of a new product, process or service. And because of this, there was an attractive inducement introduced for investors. Investors can obtain a 20% tax offset on their investment, up to a maximum of $200,000 for a sophisticated investor and $10,000 for a retail investor. The crowdsource funding legislation primarily could apply to any type of business of any age. There is no age or industry types specified anywhere in the legislation. This legislation will enable companies to negotiate with a financial intermediary, who is someone with an Australian Financial Services licence, to be able to place their crowdsource funding offer document onto the intermediary's website, and that will be the vehicle to raise capital from the public, who are called the crowd in the legislation. There's a lot of work to be done by these companies. You would expect that the accountancy profession would be closely looking at this new income stream opportunity and grasping the opportunity. Unfortunately, this hasn't happened. Do you realise that none of these companies are going to be able to raise capital if they haven't produced a business plan, budgets and cash flow forecasts, information memorandum? And once they do that and actually raise the capital, they are going to need assistance in utilising services like virtual chief financial officer services, company secretary, even a share register, because many of these companies could end up with 500 to 1,000 new shareholders, because they can raise up to $5 million every 12 months. The response from accountants at this stage on both of these new types of entities to help small, medium businesses get out of the problem of how they grow their businesses, how they add value, has been very subdued. These activities should be the new domain for accountants. Business advisory services, incorporating advice on these new types of entities, as well as business plans, budgets, cash flow forecasts, information memorandum, chief financial officer services. But if accountants do not respond to this opportunity, which unfortunately I don't believe most accountants did following the 1983 events, then a whole new industry will form. And in some respects it's already started to be formed, of business advisors who are prepared to offer these services to small, medium enterprises. Because I don't think small business enterprises are going to sit back and wait for their accountants to grasp this opportunity. Many SMEs have been asking for this opportunity for many years. They will go to people who can help them implement their strategies to be able to raise capital. Most commentators seem to be in common agreement that the tax return preparation market is under significant competitive challenges at present. There will always be corporate tax returns for businesses. No one's denying that. But the amount of income you're able to earn from the taxation return market, unfortunately, I believe is going to decrease year after year as a percentage of your fee income. So now is the time to do something about it. You don't want to wake up in a few years' time and say, you know, once upon a time, business advisory services was an accountant's domain. Because it won't be unless accountants react to the challenge to start providing the service. And if you don't get organised now, in September, which is only 4 months away, you'll be busy doing tax work again. So someone else will then be stepping in to offer these services to those companies who are not going to wait for accountants to get their act together. So if you want to know more about how you go about getting your act together so that you can service this new emerging market, this new income source, join us in a free webinar on Wednesday the 7th of June at 12:30 p.m. Australian Eastern Standard Time. You can register by going to our website www.essbiztools.com.au. If you want to look at more information about the products and services that ESS BizTools and ESS BASIP offer, please go to our website www.essbiztools.com.au for a full overview package. But if you're interested in just subscribing to an individual product, whether it's early stage innovation companies or crowdsource funding or chief financial officer services or debtors management or succession planning or buying a business or selling a business or 10 other titles, you can go to www.essbasip.com.au. Please don't let this opportunity escape the accountancy profession. I'd be very confident that firms that embrace business advisory services will be earning substantially more than 60 to 7% of their fee income from business advisory services in a few years' time. But you need to grasp the opportunity now. Have a great day. Goodbye.